Shares of Pointe Homes down more than 2% today, despite posting strong third-quarter earnings results last night. The home construction company reported a beat on both the top and bottom lines, surpassing delivery guidance and posting a record low debt-to-capital ratio of 32%. Still, Pointe saw a 22% decline in year-over-year home sales revenue, with new home deliveries also falling 16% from the same time last year. For more here, we're joined by Pointe Homes CEO Doug Bauer. Doug, welcome. Good to see you. Some of the numbers very nice, beating expectations. Others of the numbers a slowdown from last year. I suppose no one should be really terribly surprised at that, should they?
No. Tyler, thanks for having me on. As you pointed out, we had a strong beat across the board. And even with increasing rate trends that we've seen, we had solid absorption. When we measure absorption, and we look at sales per community per month, and our number was 3.3 in Q3, which is very good. And we also have a really strong setup for the fourth quarter. As we finish the year, 86% of our backlog is locked in with our mortgage affiliate at 6.6%. So it's a very solid quarter, very solid year that's set up for us. So I'm very bullish on this year, and I'm very positive about going into 24.
For those of us like yours truly who don't understand some of the numbers like absorption, you just cited a 3.3 number on absorption as being very good. What does that mean? I don't know. I'm educated.
Typically, the industry, depending on your price point, you want to sell for each community anywhere from 3 to 4 homes per month per community. So think of it that way. 3.3 is a very healthy rate. We plan our business around 3.25 to 3.5. So it's a very healthy rate, despite the increasing rate environment that we've seen.
I guess what strikes me about folks who are in your business is this. The interest rate environment affects housing affordability. But when you get to the bottom of it, there is a shortage of housing in the United States. Inventory is low because owners of existing homes aren't putting their homes on the market. So who's gonna serve the need of the housing shortage? It's builders of new homes like you. You're the swing player here, right?
Tyler, you hit the nail on the head. If I could throw a proposition to you, if you could be the CEO of TriPointe, and I just told you that your main competitor, which is the resale market, is not producing or selling about 1 million to 2 million homes per year, that translates into a greater market share, greater top and bottom line growth. And that's exactly what's happening. In addition to what you were saying, there's been a shortage of housing built since the great financial crisis. It's millions of units, depending on who you want to talk to. So the new home builders are well positioned to provide product to the millennials, the Gen Zs that are really entering their prime home buying years.
And as you point out, some of those Gen Z folks are buying homes at a younger age even than the millennials. Let me ask you one thing here that did leap out to me. If indeed new home builders are the swing player here, new home deliveries 1,223 compared with 1,463, a decrease of 16%. I think that's year over year comparatively. Why are those new home deliveries lower if, in fact, the new home builders should be getting a bit of a boost from the fact that they're kind of the swing player in the market?
Well, orders, I believe, were about 122% above last year. You're comparing deliveries. And what happened last year, the Fed increased rates, as you know, 7 times. So the consumer paused for about 6 to 8 months, but then re-engage as we got into 2023. So that comparison to 22, we're pretty much blown. All the builders are blowing that out of the water when it comes to orders, and it provides a really strong setup for 2024.